This is Nightly Business Report with Tyler Matheson and Sue Herrera.
Zigzag day, stocks dropped, then climbed, and now some investors want to know if the mix of earnings, the election, growth concerns, and the Fed will lead to more volatility.
Regaining trust. Will the CEO change at Wells Fargo be enough to soothe the outrage in Washington and on Main Street?
Million-dollar gamble. In today's housing market, the potential profit from a house flip is much bigger and much more risky. Those stories and more tonight on Nightly Business Report for Thursday, October 13th.
Good evening, everyone. Welcome. Don't look now, but volatility may be starting to make an appearance. Stocks began the day with a steep drop of more than 180 points as investors ran from equities and towards the safety of government bonds and gold. A weak reading on trade out of China reawakened concerns that slower global growth may be at hand, just as the Federal Reserve considers an interest rate hike later this year. There's also the issue of earnings, which, as we reported, did not get off to a great start yesterday. But then, midday, oil moved higher and investors shook off those growth, interest rate, and profit concerns. And just like that, the losses were paired. The day finished with the Dow Jones Industrial Average losing 45 points to 18,098. The Nasdaq was off 25 and the S&P 500 fell 6.
Let's turn now to David Leibovitz to talk more about the market and whether or not we can expect more volatility in the days ahead. He's global market strategist at JP Morgan Asset Management. David, welcome. Good to have you with us. What do you see? Is this a time between now and, let's say, the election now and year end where we should be ready for some big swings?
So I think that investors should be prepared for a little bit more volatility. Obviously, the next couple of weeks, if the political polls begin to show that the race is a bit closer, that could drive some volatility in the market. And, our expectation is that the Fed will hike rates in December. And so we may begin to see some jitters as that meeting approaches. The one thing I would say about the Fed, however, is I think they've been priming the pump for a December hike for some time now. I think that the hawkish rhetoric, which started towards the end of the summer and into the early fall, was all in an effort to get investors comfortable with the December hike. So I think that the bigger risk from a volatility standpoint is probably the election or a deterioration in the economic data. I think the market is fairly comfortable with the Fed hiking rates at this point.
But what about earnings? As we reported yesterday, Alcoa did not have a good report. We still have the banks coming tomorrow. What if we don't see an improvement in earnings?
So, our view is that on a year-over-year basis, earnings growth is still going to be in negative territory. The risk to the upside is that they would be flat on a year-over-year basis. But I think that what matters much more are expectations. And 2016 earnings estimates have come down fairly significantly over the past couple of months, essentially making the hurdle which companies need to get over that much more doable. So my view is that companies will be able to beat earnings, or the majority of companies will be able to beat earnings. And it's really that besting of expectations that tends to matter for the market rather than the level of earnings growth.
Do you see 2017 as a pretty good year for corporate profits, or sort of what we've been seeing?
So I think 2017 will be a better year for corporate profits. If you look at consensus estimates right now, analysts are looking for about 14% earnings growth next year. I think that that's a little bit too optimistic, but I do think that earnings growth between 3 to 5% is very achievable. The two things that have held back earnings to this point, the stronger dollar and lower energy prices, are continuing to abate, and my guess is that 2017 rather is going to be a year where less dollar strength, less weakness in energy prices allows revenues to pick up, and if companies can keep margins where they were, that should translate into decent earnings growth.
All right, David, thank you very much. Appreciate your time tonight. David Leibovitz at JP Morgan Asset Management.
A Federal Reserve official today said that he prefers to see a rate hike sooner rather than later, but thinks the central bank might want to wait until after the presidential election. Philadelphia Fed President Patrick Harker, who was in favor of a hike at the central bank's September meeting, said the Fed's November meeting comes at an uncertain political time. Harker is not currently a voting member, but he will be next year.
A new era at Wells Fargo. Today was Tim Sloan's first full day as CEO of one of the nation's biggest banks. His appointment follows the departure of John Stumpf, who retired in the wake of that fake accounts scandal, as we reported last night. But what's next for the embattled bank? Wilfred Frost reports.
The management changes at Wells Fargo in the last 24 hours have been applauded by the analyst community as a necessary, though not sufficient, condition for the bank to be able to move past its recent scandal.
What is welcomed is the fact that there is a new CEO who, yes, is an insider, but not from the embattled retail part of the bank, and also a new board setup that includes independent chairman and independent vice chairman. Though pressure remains from lawmakers, most notably Senator Elizabeth Warren, who said, quote, "If Mr. Stumpf is leaving with all of his ill-gotten millions, that's still not real accountability." In an exclusive interview with me last night, the new CEO, Tim Sloan, confirmed there had been additional requests from Congress for information, but he hopes any potential hearings of his own will go more smoothly.
We were disappointed that the hearings turned into a situation in which there were more speeches given than questions asked, because we felt like there was more answers that we could have provided. But those hearings are over with, and we're moving on.
The company reports earnings tomorrow morning, where we will see if there's been any financial impact. The other outstanding question is, what is morale like amongst the troops? I asked Sloan whether this had been a proud or sad moment for him as he took over.
It's a sad moment because John Stumpf is retiring in a situation that I think he would have never imagined. And he has done such a great job in managing this company, notwithstanding some of things that I think he wished he would have done differently. That's what makes it sad. Having said that, I feel a great responsibility, and I'm looking forward to being the CEO of this company.
For Nightly Business Report, I'm Wilfred Frost in New York.
Wilfred just mentioned the reaction from Senator Elizabeth Warren, who is one of the bank's most vocal critics in Congress. But will Wells Fargo's change of leadership do anything to calm the outrage in Washington? Eamon Javers has been following that part of the story. Eamon, that's the question. How's Congress likely to take these changes?
Well, Sue, I love the quote from the new CEO there in Wilfred's piece, who said that they were disappointed at Wells Fargo that the congressional hearings turned more into a thing about members of Congress making speeches than asking questions. He's obviously not been to a lot of congressional hearings. That's what they are. And look, if you are cynical about this from Wells Fargo's perspective, what you want to do is hope that the CEO change is going to take this story off of the headlines for the time being. Headlines are what attracts congressional attention. Congress doesn't have all that much attention to give because, as you may have noticed, there's a major national election going on right now and some serious infighting up here on Capitol Hill. So all of that's got Congress distracted. There are not that many days left on the calendar, either before or after the election, for Congress to hold any Wells Fargo hearings. So they may, just in terms of running out the clock here, they may be lucky in a cynical and sort of strategic approach to this.
So the likelihood of additional hearings sounds like it's a questionable proposition given the calendar. Do you think members of Congress are pleased that the new guy is an old guy? He's part of the old guard at Wells Fargo. He's been there 27 years.
Yeah, that's an interesting question. And what we still don't know in all of this is just exactly what did the C-suite at Wells Fargo know about all this, and when did they learn about it all, and what, if anything, did they do to stop it? So one of the questions that Elizabeth Warren will continue to have is, who are this new cast of characters coming in, and what was their role in all of that? Whether that extends more broadly outside of Elizabeth Warren, who views it very much as her mission to stay on top of this kind of thing, that's the big question for Wells Fargo, whether it attracts more broad congressional interest. The likelihood of that between now and the election is zero. After the election, it's probably pretty minimal.
Eamon, thank you. Eamon Javers in Washington.
So what about Wells Fargo's customers? Will the change at the top help regain their trust? Aditi Roy went to find out.
Wells Fargo is trying to win back customer confidence. This after many customers say they feel disenchanted with the bank amid its sales tactics scandal.
I'm the kind of person who doesn't monitor my bank accounts, but I was grieved to hear that highly powerful bankers were being opportunistic.
Hours before CEO John Stumpf's resignation was announced, Wells Fargo sent out an email to its customers outlining the steps the bank is taking to regain the trust of its clients. In the email, Wells Fargo says it has refunded customers who were given unauthorized fake accounts and are working to find other customers the bank might have missed. The bank has already doled out refunds each, averaging $25 to 100,000 customers to reimburse them for unauthorized fees, and has set aside $5 million for payouts. The bank also assured customers that from now on, it will send them a confirmation anytime an account is opened. But for some customers, it may be too little, too late.
I'm not thrilled. I think it's shameful, and they talk about business where you should be compensated for what you do, and not only giving back the money, but really I think you should be prosecuted.
Earlier this week, the Wall Street Journal reported it reviewed a recording of a conference call between Stumpf and 500 of the bank's top executives. The paper says during the call, executives projected growth in new retail banking business would likely be down as a result of the scandal. Newly appointed CEO Timothy Sloan added that the bank is still opening more accounts than closing them, but seeing slower growth in new checking accounts from a few months ago. From the people we spoke to, regaining customer trust will be an uphill climb. And for Wells Fargo to regain the trust of its clients, the Committee for Better Banks, a group of bank workers and consumer advocates, says the company needs to do more, that Stumpf's resignation was just a first step. And in another effort to get back that trust, Wells Fargo took out a full-page ad in newspapers across the country. Its title, Moving Forward to Make Things Right. For Nightly Business Report, I'm Aditi Roy, San Francisco.
Wells Fargo is one of a handful of banks to report earnings tomorrow, and the results come at an interesting time for the industry. Bob Pisani takes a look at what's on tap.
4 big banks, JP Morgan, Citigroup, PNC, and Wells Fargo, report earnings tomorrow, and there's a lot riding on these reports. Banks have had a notable run-up in the second half of the year. Some banks, like Bank of America, are up double digits since July. What's going on? Higher interest rates are the main factor. Short-term rates in particular are higher, and that means banks could charge higher interest rates for loans. Now, another issue is loan growth. Consumer loan growth is still strong and will likely grow about 2% compared to the second quarter. But commercial loan growth seems to have stalled out, and it's not clear why, but it may be due to slower capital expenditures by corporations, which reduces the need for loans. Now, another big issue is bank regulation. This is a huge wild card. The Wells Fargo debacle has brought this back on the front burner, and bank investors have been very jittery this week about the very small chance that the House could go Democratic, which would greatly increase regulatory scrutiny of banks. All right, so what's the bottom line here? There's a lot to like about banks. They have more cash, they have better cost control, and the loan quality is better. But it's really hard to make money with rates so low. Given the price run-up, prudence seems to be the order of the day. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.
Still ahead, the technology industry is a growing part of the economy, so why isn't it creating the number of jobs many people thought it would? The number of Americans filing for unemployment benefits held at a 43-year low last week, according to the Labor Department. Initial jobless claims, viewed by most as a proxy for layoffs nationwide, were unchanged at 246,000. The report suggests that employers are holding on to workers as the labor market tightens.
The tech industry has brought us Google search and Facebook friends over the past decade. But according to the Wall Street Journal, the one thing technology has not given us is enough jobs, even as it has become an integral part of the economy. Nariman Baravesh is the chief economist at IHS Markit, and he joins us now to talk about why tech is not creating the number of jobs that many thought it would. Good to see you, Nariman. Welcome back.
Thanks.
Well, I guess that's the question. You know, a lot of tech is such a large part of the economy and growing every day. Why is it not generating job growth?
Well, this is a classic example of an industry that's very much sort of knowledge-based, and because it's technology-based, the ratio of jobs, if you will, to revenues or jobs to profits is not that high. I mean, this is a kind of industry now that if a handful of people can create, you know, a new app, a new company. It doesn't take, hundreds or thousands of workers. So in that sense, this is not necessarily a new phenomenon. It is very much a part and parcel of the, if you will, the knowledge-based industries, which require fewer and fewer workers in a sense. That's the technological revolution that we're in the middle of. It's sort of a good news, bad news story. Good news is a lot of technology. Bad news is not as many jobs.
The Wall Street Journal said in its article today that when Instagram was bought for $1 billion a couple of years ago by Facebook, they had 12 or 14 employees. That's all they had. But it's true, isn't it, that a lot of technology manufacturing jobs have gone away. IBM used to make computers up in New York. Cisco used to make routers and switching equipment. Intel used to make many more of its semiconductors here in the United States. Now, not so much.
It is true, and I think it's a little hard to disentangle two phenomena here. The first is what you're saying, which is offshoring manufacturing, something that's happened not just in tech, but in a lot of other industries. The other is this technological sort of revolution that we've been talking about, where new companies are being formed that just don't take as many employees. The other thing that's happening is just looking at this particular article focused on IPOs as a measure of activity, if you will. But there's a lot of stuff that's happening that's not being picked up there. For example, a lot of app development around Apple or smartphones. These people don't go out and ask for an IPO or float some stock. They're doing all the stuff. They're getting the income. So there's a lot of activity going on in tech that's just not being picked up if you just look at sort of the overall jobs by company, which is what this article did. There's a lot of stuff that's getting lost in the shuffle, as it were. And we're really picking that up when you look at the employment numbers, for example, in the U.S. economy that have been quite strong.
Nariman, we have to leave it there. Thank you. Nariman Baravesh with IHS Markit.
Well, Yahoo's data breach may give Verizon an out from its potential deal to buy the company, and that is where we begin tonight's market focus. The wireless carrier said that Yahoo's recent breach could have, quote, a material impact on the nearly $5 billion acquisition, potentially allowing Verizon to call it quits. It could also be a bargaining chip, since just last week, Verizon reportedly asked for a $1 billion discount due to the data breach. Shares of Yahoo were off nearly 2% at $41.62. Verizon off a penny at $50.29. Xerox's largest individual shareholder, Darwin Deason, is suing the company, alleging Xerox's plan to split into two companies violates a deal the company struck with him before it bought his company, Affiliated Computer Services, for about $6 billion in 2010. The company has responded, saying the lawsuit is without merit and it will move forward with plans to divide in two. Xerox shares fell 2.5% to $9.55. DeVry University has settled with the Department of Education over allegations the for-profit college used deceptive job placement ads to recruit prospective students. The settlement subjects DeVry to more financial oversight and requires the organization to provide a $68 million letter of credit, but it will allow it to keep its access to federal funding. DeVry shares up 1% at $23.34. And Delta Airlines posted better than expected profit despite taking a $150 million hit from a computer outage back in August. The company's CEO said the airline has been operating in the weakest pricing environment for some time, prompting it to cut back on a key metric.
It's hard for us to call the bottom. We've been looking for the bottom for some time. When you look at what the drivers are in terms of the challenges, certainly the capacity environment and growth in excess of demand is one of the challenges that we're facing. We're announcing today that we're going to be reducing our growth rate to 1% in the fourth quarter and keeping that throughout 2017.
Shares of Delta up nearly 2% at $40 and a penny.
Winnebago posted a better-than-expected profit thanks to an influx of orders for its towable trailers. The motorhome company also saw revenue rise, and that, too, beat expectations. Winnebago shares were off a fraction to $27.84. Ulta Salon lifted its profit and same-store sales forecast for the quarter and the full year. The cosmetics retailer also said it plans to open more stores than previously announced. Shares of Ulta rose more than 11% to $266.14. Bad weather hit results at golf and country club operator Club Corp. The company saw a rise in revenue, but it wasn't enough to top street expectations. And also, profit came in light. Investors were hoping for a mulligan as Club Corp shares fell 12% to $12.32.
Sony joins the virtual reality race with a new headset for its PlayStation 4 gaming console. But virtual reality and augmented reality isn't just for gaming. It's part of a wave of new technology that's being used to transform the advertising industry. Julia Borston has our story.
Forget about the 30-second spot. The future of advertising won't be skippable. Futuristic technologies from augmented and virtual reality to artificial intelligence are already making marketing more compelling and useful than ever. Take North Face, which is using artificial intelligence from IBM's Watson to recommend a jacket for travelers based on what trip they've just booked. And this is just the beginning of how AI and even facial recognition can figure out what message is right for you.
What we're going to see are ads and brands and even, complete stadiums, if you will, identify me and automatically tailor to me proactively.
And brands are tapping into the immersive power of virtual and augmented reality. Take Agile AOL, inking a 7-figure deal to create virtual reality branded content for American Family Insurance. Part of the wave of more than $12 billion projected spending on virtual and augmented reality ads by 2020, driven in large part by augmented reality, which can work on any smartphone. Augmented reality ads are already popping up in Pokemon Go, and advertisers pay millions of dollars for Snapchat's sponsored filters. L'Oreal's app allows consumers to experiment with makeup colors, and this is just the beginning of augmented and virtual reality's disruptive potential for marketing.
For those brands that are really experience-driven and really want to allow people to trial that experience and also elicit that emotional response, that's where VR is going to excel.
Absolute Vodka is already live streaming concerts to VR headsets to earn that high-tech halo with consumers. Audi aims to sell cars with this new virtual experience. Consumers can test drive any Audi model, bringing traditional TV commercials to life. For Nightly Business Report, I'm Julia Borston in Los Angeles.
Coming up, high risk, high reward. But do you have the stomach to do a high-end house flip? Here's a look at what to watch for tomorrow. As we reported, Wells Fargo, JP Morgan Chase, and Citigroup released their quarterly results. Fed Chief Janet Yellen delivers remarks on the economy. Investors will be looking for any clues on the timing of a potential rate hike. Retail sales will shed more light on the strength of the consumer, and that is what to watch for on Friday.
Mortgage interest rates inching higher in anticipation of a Federal Reserve interest rate increase later this year. According to the latest data from Freddie Mac, the 30-year fixed rate average rose to 3.47%, hardly high, but a little rise. The move higher followed an increase in the yield on the 10-year Treasury, which mortgage rates track closely.
House flipping is the hottest it's been in nearly 2 decades. And as home prices heat up, high-end flipping is also gaining steam. It is not, however, for the faint of heart. The rewards can be high, but so are the risks. Diana Ulick has been following one investor for 4 months and gives you a peek inside the anatomy of $1 million flip.
30 inches off the toilet, okay.
Last June, real estate agent Dana Rice was deep in the throes of remodeling this 1938 home in Bethesda, Maryland. She bought it for $600,000, intending to flip it for a hefty profit.
It's absolutely not as easy as it looks.
4 months and $400,000 in construction costs later, she just put the house on the market for $1.469 million.
In this particular area, for this particular house, I'm very confident because I feel as though the product we delivered, we really sweated the details on it, and I'm already getting great response from people who are looking at fixtures, colors, textures, and things like that. And it's not what they see in a general renovation flip.
Flipping is coming back with a vengeance, despite the fact that there are far fewer distressed properties for investors to buy on the cheap. Getting in costs more today, but the potential profit is bigger. There were more than 51,000 flips in the second 3 months of this year, a flip defined as buying and selling a home in the same 12-month period. That is the highest level in 6 years, according to Atom Data Solutions. Average return on investment rising to nearly 49%, thanks to tight supply and fast rising home prices.
And rising prices are key. Today's home buyers are already cash strapped and don't want any additional renovation costs when they move in. That means they're willing to pay a premium for a turnkey property.
The Chartier family was the first to arrive at Rice's open house.
I think for us, having had somebody else do all the work is great. There are a lot of houses around here that are old and ready to turn over, sort of need an update.
So far, no offers on the house yet, but Rice says she is not concerned and is betting on location, quality, and high-end amenities to turn her $1 million investment into a high-end profit. For Nightly Business Report, I'm Diana Olick in Bethesda, Maryland.
And to read more about high-end house flipping, head to our website at nbr.com.
We will find out what she gets for that house.
Yes, we
She
will.
staged it beautifully, though, I have to say.
It's gorgeous. Yep, and expensive. Okay, that's Nightly Business Report for tonight. I'm Sue Herrera. Thanks for joining us.
And thanks for me as well. I'm Tyler Mathisen. Have a great evening, everybody, and we'll see you back here tomorrow night, Friday.